I bid you all good morning, good evening, good night, wherever you may be watching this transmission. Guys, this is a very important video I kind of want to throw out there for you guys. And central banks and what they've been doing, doubling down and not taking the failure or how they failed miserably and expropriating and not looking at how wealth is being fairly distributed. Okay, let me just read this for you guys. President Trump says he could get used to negative interest rates. Why you shouldn't wish for it to happen. And they're expanding quantitative easing or repo markets or whatever you want to call it. And now they're looking at going negative percent. Now you put money in the bank, it's basically, it's worthless. It doesn't grow. It's not a policy to help stimulate growth and wealth. The banking is not really helping the middle class or the working poor. Now, they're breaking many laws. We're seeing what's happening all over the Commonwealth, from Australia, United States, Canada, all these countries, and more accumulation of debt is happening. And we're consuming our future. I don't know if you've ever watched Max Kaiser, but he brought this up. We're consuming our future today, and that is, he's dead to rights on that, on his show. I saw that a few months ago, and it just popped into my little peanut of a brain. But yes, and now this is what's happening. We used to be wealth builders. We used to build wealth. We used to build money. We used to get a good percentage rate on our bank accounts. We used to make money back. Now it's getting to a point where they want to take that away, where they're going to start to punish savers and then reward borrowers. So there's a couple of banks already in Europe that's gone negative. And it's dangerous. And Deutsche Bank too. Like, it's this is the end of globalization is what it is. You know what I'm saying? Now, like, we go into negative. It's the end of prosperity for middle-class families. And how do you think the global economy is going to start reacting to these negative interest rates? And, going into globalization. I'm sorry. Going into a more globalized, with this oversupply, no jobs, and anyways, let's get to what I'm sorry. I've already taken up 3 minutes of your time. President Trump says he could get used to negative interest rates. Why shouldn't wish for that to happen? Why you shouldn't wish? Why? There's a lot of reasons why. Because people that save, okay, you put money in your bank, you get nothing for it, and now it's basically the middle class turning into serfdom. The rigging of the systems, and it's a dangerous game, and the end game will resolve into a massive social uprising, guys. I want to throw that out there because that's what's eventually we're on the path to that. President Donald Trump loves the idea of negative interest rate, while JP Morgan Chase and CEO Chairman Jamie Dimon has trepidation about them. So how should Americans feel about them? Speaking at Davos, President Trump seemingly encouraged the Federal Reserve to adapt negative rate policy. We're forced to compete with nations that are getting negative rates. You're not competing, you're losing with them. It's like they're throwing everything at the kitchen sink. They're throwing everything at this market, everything, and the kitchen sink. Sorry, I had to do the sign across there. Something very new, Trump is said during the speech at the World Economic Tuesday, meaning that they get paid for borrowing money, something I could get used to very quickly. I love that. That isn't the first time the president called for negative interest rates. Last September, the president tweeted a similar message. Like, again, like Max Kaiser calls it, the U.S. a Ponzi scheme. Negative rates. It's one of the tools, unfortunately, in the banking armada that they have. And it gives a temporary boost. I'm not going to lie. It's not that it won't, but it does give a temporary boost. And and banks working together, and banks borrowing from each other and then relending to others, and then relending and then repackaging that and relending to others. And they don't even provide good services anymore at the banks. Anyway, others are less keen on the prospect of negative rates. JP Morgan's Dimon criticized the policy during the interview of CNBC, arguing that the outcome of negative rate experiments in Europe and Japan is still unknown. Expropriation of wealth, my friends. And what are they doing to solve this problem? They're feeding the Frankenstein monster, like I said, that they've created, and they keep feeding and building this Frankenstein monster to get bigger and stronger, but now they can't kill the monster. Do you know anybody that's actually bought negative interest rate bond? Dimon says the buyers are central banks and insurance companies or index funds of passive funds. I would never buy a negative interest rate bond unless I was forced. In history, when you see something like that, it does not necessarily end well. This is very true. Right? We got GDP declining pretty much since 2012. And then you're seeing the collapse of globalization. And the debts are getting way out of proportion. And then you start turning to negative interest rates and other repo market stuff or whatever they're looking at, or even abolishing cash to make it hard for having a runoff on the banks to pull your cash out. This is increasing wealth and income gaps, and we know that. There is some precedent for what happens when interest rates reach zero, and below recently in Denmark, last August, Denmark's Jyske Bank is at negative 3.82%, began offering a 10-year fixed mortgage at negative 0.5%. Around the same time, Finland-based Norda Bank announced that it will offer a 20-year fixed mortgage in Denmark. It's a bunch of empty suits. These people don't have a soul. That changes to no interest, and the bank was preparing for the possibility of home loans up to 30 years in a duration of having negative rates. As of August, 30-year fixed rates averaged just 0.5% in Denmark. This is the Black Swan event. You got the creation of fake debt. On top of debt, quantitative easing, printing more and more records amounts of money. We've never had so much money on Earth than now that we've had ever. The scary part of this all, we have elections coming up. Okay. Are they going to mention any of this? Are they going to bring this up? I think the American elections is just going to be about climate change and all kinds of weird crap that make no sense about saving the middle class and the working poor. So, monetary policy can't create real economic growth. I don't understand why they don't understand this. It's not going to create a real growth in any sector human possible. We're gonna be serfdom. We're serfdom. We're gonna be serfs, basically. So what will happen if interest rates turned negative in the United States? It would become harder, or at least more expensive, to save money. Banks would be charging negative rates on deposits, meaning that consumers would be paying the bank for opportunity to squirrel money away, and that's when they start abolishing cash. Bank customers could turn to more risky methods in stashing money, such as holding onto actual cash or putting it into a riskier investments, or gold and silver, guys, maybe even crypto, said Daniel Hall, chief economist at Realtor Who Cares. This could also have a ripple effect across people's financial lives. This might put some pressure on home buyers and shorten their home searches to avoid them having a down payment money eroded by negative rates. Hale said it could also make it more difficult to save up for a down payment. Well, yeah. Yeah. In Denmark, the ultra low. Sorry, I had to if you're saving your money and it's being chipped away at, how are you going to save for a down payment? In Denmark, the ultra low interest rate environment has turned caused home prices to increase as borrowers could afford pricier homes. This pents up the market to more dangerous levels. Prices in bigger cities like Copenhagen have been boosted, says the group here. Danish Financial Supervisory Authority has consequently taken measures to counter this effect to prevent the housing bubble from forming. So they're preventing the housing bubble from forming by basically creating this fake... What do they do now? Like, what are they going to do now? Well, I see what they're going to do now. They're going to be going after pensions. They're going to be going after anything that has anything in it to basically strain what's available in any availability of any liquidity. I don't expect negative rates in the USA anytime soon, but even if or when we do see the pop in the Fed's funds rate or bank rates, it will probably take a few years before we see the possibility of negative mortgage rates, Hale said. Yes, they won't see negative mortgage rates because they're not going to do that. You'll see negative rates on your bank account, but not on borrowing for a house in America. But in Europe, it's different. It's negative across the board, right? It gives leeway to a point, right? But it's disabling people too. I don't know what to say, guys. Anyways, guys, if you want to support the transmission, here it is, the Mike Martin's channel. Click the button here if you want to join, if you can join and support the transmission. Also, buy something on Teespring. All links are found on top of my channel. Also, other articles here. Ticking Time Bomb 2020. Growing number of banks are introducing negative rates. Negative interest rates are destroying the middle class and sustaining the zombie corporations in Europe and Japan. Bitcoin is a better option than banks for saving money. And we got sounds of deaf to negative interest rates. Ben Bernanke sounds tone deaf on negative interest rates. Sorry, guys, I don't know what to say, man. I don't even know how to bring this, to you in a good way to tell you guys that maybe this might be a really bad position that we could put ourselves in. But it's these super committees, it's these governments, it's these banking institutions that make the decisions on us, you know? And they're trying to redouble or retriple their efforts by ruining other people, the middle class. So, anyways, let me know what you guys think in the comments below. I look forward to reading your comments. Thanks for watching. And remember, this gets introduced as a discussion. Then it gets revisited. Then it gets spoken on the floor. Then it gets put into maybe some sort of a clause or something. Then it gets put into law. And then it becomes a normality. And then they start removing physical cash to stop people from runoffs on or losing confidence in their banking systems. Mike Martin's here. Thanks for watching, guys.